What's up, HyperFast Nation? On this episode of the show, I sat down with a loan officer extraordinaire who also helps real estate agents build their influence on social media, specifically through video. He's closed over 600 loans in his lifetime, and he can close them in under 10 days. Welcome to the show, Karl Svendsen. Welcome to the show today, Karl. How are you doing?
I'm blessed, Dan. Thanks for bringing me on.
Yeah, always great to have a loan officer on, especially right now, March 2023. Crazy times we live in. You know, the rates jumped up a lot, Q3, Q4, then started coming back down in January. Then some economic indicators made everyone think, you know, the Fed would get more aggressive in February. Then the inflation battle wasn't over. So we saw them go from like 6s back to 7s. And then all of that changed recently with these banking meltdowns, right?
Yeah, we still have some certain dates that people are on the lookout for. Like, you know, Barry Habib's is kind of renowned as the person that's been the most accurate with market predictions. And, you know, like back in October, he circled a date for us on when, you know, rates were going to, you know, make some moves. And then we saw here, you know, in March, when the jobs report came out, he was spot on again with, you know, significant improvement. But then that was, you know, exacerbated because of the bank failures. So, you know, now he still has a date circled for us in May, but until we get to May 10th, we're probably going to be up and down.
What's May 10th?
Overall.
What's going on then? What do we need to look out for May 10th? You don't know?
No.
All right. Something's happening May 10th with mortgage rates. And we're going to be watching.
Yeah.
Well, I think it's, you know, this, you hear about like the last year's been quantitative tightening, and now a lot of people are arguing that what's been going on is bigger and bigger than ever quantitative easing, right? Because the Fed not only said, hey, we're going to guarantee deposits over 250. They also said, banks, you can borrow from us using your bonds and as collateral, and you can value those at par, not market, right? So the banks are holding all these longer term bonds, and then the value of them, market value goes down when the rates go up, right? So the Fed kind of like destroyed the value of all these banks' bonds. But now they're saying you don't have to value them at market value. You can value them at the par value, which so a lot of people are arguing that's like a $600 billion implied injection, which is more quantitative easing. You know, Peter Schiff, if you follow him, he's said basically in 1 week the Fed threw more money back in the system than they took out of it in the last 4 months, and that in another week he thinks, you know, the Fed balance sheet will be bigger than it was before quantitative easing. There's a whole other camp too that says that like what the Fed's doing doesn't technically qualify as quantitative easing, but it feels like it when you look at what rates have done, what the 10-year has done, right? Like going from 4% to down into the 3.4s.
Right. And it recently broke the 200-day moving average. So, you know, we'll see likely more movement downward, because once you break a moving average, that wall of resistance kind of no longer is going to help prop up that certain point. But with the recent bank bailouts, you know, there's less money in those funds for reserves and stuff. So, you know, it's going to be interesting to see how the Fed decides to handle that.
Inflation.
You know, well, I mean,
taxation through inflation.
There's already so much uncertainty, you know, at those Fed meetings, because most of what investors do with their money is based on what the Fed chairs say. You know, and if you're keeping up, then you'll see that a lot of the time they're out of touch with their statements, because data lags. All their statements have really been based on the data that they've been seeing, and you know, data's going to lag a month or two behind what's actually happening in the markets.
I don't know why anyone actually believes a word that they say. If you think about it, a year ago they were telling us inflation is transitory.
Right.
Now they're saying they need to fight it. Or they were. Now they're worried about the banks, and they're not really fighting it. But do you really think they believed inflation was transitory? Like, I mean, these are smart people, right? They all went to Ivy League schools and all that good stuff. Like, did they really believe that inflation was transitory, or were they just BSing us?
I would lean more on that there's some personal motives behind their statements. Yeah. I mean, there's probably a reason why they wanted everybody to not panic and, just kind of ride the storm until they were forced to respond. But I mean, some people have come out and said that, the Fed meeting this week, they're likely not going to raise rates in response to, the bank failures. Because if they keep raising rates, then it's just going to create the bond. It's going to create more of a challenge with the spread on the bond.
This episode will, I think, deliver right after that meeting. So, yeah, who knows? I think the market was saying, but prior to the bank failure, it was like 50-50 between will it be a 25% hike or 25 basis point hike or a 50. Mm-hmm. Now I think the 50 is off the table, and most people are thinking 25, but there's a decent chunk saying 0. Where do you think we'll end up? The end of the year. Any insight on that or predictions? You pull out your crystal ball.
Well,
what's the industry saying actually?
Yeah, a lot of people are kind of looking towards October, November for some good improvement because. I mean, we'll see how inflation responds now that all this extra money is getting injected into the market. So that may change things. It just depends on how inflation numbers look over these next couple of months. But mortgage interest rates historically follow inflation more than anything. If you put the two charts together of the last 10, 20 years of where the inflation metric was and where mortgage rates were, they are pretty identical. Right. So, our worst months for inflation was in October and November of 22, and it's based on a 12-month rolling average.
Right, so that'll fall off.
Yeah, so those months won't matter anymore when we get to October and November. So that should make interest rates respond, to buyers' benefit.
Now, you guys at USA Mortgage, you have a program where, I mean, you do a number of things to help buyers today, right? You've got the different rate buy down things you do, but then you also have something where if someone gets a mortgage today and a year from now, they're lower. They can refinance for free, right?
Yes.
I don't want to misspeak. So what do you guys do in terms of rate buy downs and refinance?
Yeah, it's considered a lender paid refinance where we're going to pay the title fees for the title company to do the new closing. There's recording charges to record the new mortgage at the courthouse. Not all refinances require an appraisal, but if it does, we'll pay for that. And the way that we're doing that is essentially the loan officer is waiving their compensation, so that way the buyer can still get that refinance. So it's truly a lender paid refinance because everything else is still the same. It's just based on how far rates move on what their improvement is. But the temporary buy downs have been super popular because you have the ability to drive your rate down further than on a permanent one, and then let's just say they do a 1 or 2 year option. If we're sitting here, November, December, and rates went down 1%, well, then they can do that refinance to the permanent lower 1% rate. And then there's still money left in that escrow account from the temporary buy down that they can throw at their loan balance or, put it towards the interest rate to get it even lower. So
they're not wasting it, which is pretty cool. Cause I've seen other programs where if they pay for the rate buy down and then they refinance to a lower permanent, they kind of like wasted that money. But this program, they're not.
Yeah, because on the permanent one, as you know, it's a one-time fee paid to the lender. You never get that money back. And on the temporary one, it's money that gets set aside in an escrow account. So, I mean, you can pay it as the buyer, but it doesn't really make sense to pay it as the buyer because you're better off just putting that extra money in your own interest-bearing account or an investment fund, instead of letting your lender hold it. So the way that we set it up is, in a perfect world, we ask the seller to pay it. But if we can't get the seller to pay it because, there's often very, competitive situations for buyers, we'll just do it as a lender paid.
What else do you do to help realtors? Like this is a great example of how you're helping real estate agents have more tools to help their buyers overcome the fears right now. But I think another good tool you have in your pocket is the speed at which you can get things done, which can matter if there's competition. Like, you guys have been able to close loans in what, like 9 days? Right?
Yeah, I mean, the fastest one we ever did was 8 days.
Okay.
But I mean, we can promise like a 14-day closing all the time. So,
But you've done 8 before.
yeah. Well, legally you can't close faster than that.
Okay.
So that's kind of what you run into the legals there. But
You've done what Barney Frank and Chris Dodd have said you could legally do. Speed. Okay.
But
Dodd-Frank Act.
Yeah. So my first conversation with most buyers.
By the way, do you know Barney Frank was on one of the boards of one of these failed banks?
Well, and then
funny because he wrote all the banking regulations.
Then there's that other guy from Lehman Brothers. That guy, he had a resume, right?
Yeah, it's interesting. These guys keep coming back.
I'm sure they'll still find another job.
So 8 days is like kind of
everything has to
legal timeframes, disclosures, right? 14 is kind of the promise, but 9-ish, 10 is well within your guys' wheelhouse to close a deal. And at that point, you're pretty much giving your buyers, that are using loans, you're giving them the ability to almost act like cash, like almost the same benefits to the seller.
Yeah, I mean,
so real estate agents, like if you find a lender like Karl, who's got the different interest rate programs, buy down programs, free refinances, and speed, you're giving your buyers a huge advantage in the market.
Yeah. My first conversation with the buyer is, you'll determine how quickly you can close, but ultimately if they don't want to close in 14 days, I still let them know that, we're going to communicate that to the listing agent to let them know how strong of a buyer they are and to help their offer, be differentiated from all the others, and the real value add is that it's going to give them the most negotiating power. I mean, because I had one last month where there were 3 other higher priced offers and they took our offer because of speed.
Wow. Yeah. Speed definitely matters. Another thing that matters too, last thing we'll kind of touch on here is helping real estate agents get more business through social media. I know you're partnered with Jeff Fitzer, who's got real estate business school, Drunk on Social. He's got all these different, I'm probably saying the names wrong, but he's got all these different platforms where, he educates real estate agents and lenders on how to use social media to get more business. What specifically or how can you help real estate agents with their social media and video to get more business?
I like to team up and, help create content because, that's, usually where a lot of people hit the wall. It's like, I want to get started, but I don't know how to create content or captivating content at that point, and so, I've done a bunch of collaborations with agents where, we just either will do an Instagram reel together or we'll do a pre-recording on StreamYard or something where they can go back afterwards and they have, they can make 3 or 4 reels out of that one StreamYard clip that we shot in 20 minutes. And it's providing value to their audience instead of, for me, I follow, my whole network is pretty much real estate agents on social. So when I go down my feed, it's just completely covered with closing pictures.
Right.
And it's at the end of the day, your client's not going to really engage with that. They're not interested in your closing photos. They're interested in how, stories. Storytelling is probably the most captivating, easiest way to create content. So if you can tell a success story, something that you did that, provided value to somebody or a tough situation, people are more likely to tune into a short form story than they are to, engage with your closing photo.
Yeah. Yeah, I agree. And I think that's huge value that you add. It's, you're giving them ideas, you're giving them support. You're also kind of giving them accountability on doing it. If people want to learn how to work with you to make more video content for social media, how should they connect with you?
Find me on Instagram as the Karl Svendsen. The Instagram is probably my main connection.
Spell that for them. There's probably 200 ways to spell what you just said.
Yeah, TheKarlSvendsen. Connect with me on Instagram. That's really where I do most of my stuff. And I mean, the way that the platform's set up now, you can do collaborating reels, and then it goes to both people's sphere of influence.
Right.
So it's much easier for you to be able to pick up more followers, build your audience, and, just reach more people.
We'll make sure to put your IG handle in the show notes and YouTube description. Thanks for being on the show today, Karl. Can't wait to have you back on, maybe in a few weeks, get a little market update on what in the world's going on with interest rates here. And real estate agents, if you're watching, listening to this, reach out to Karl if you want to learn more about how he can help your buyers with all the different programs we talked about, and help you to get more effective on video on social media. So thanks for being on the show today, Karl.
Thanks for bringing me on.
All right. Well, thank you everyone for tuning in and watching. Please make sure you leave us a review on iTunes and share this episode with other real estate agents that you think would benefit from learning as well. We'll see you next time.